Good evening, traders, and welcome back to BCR's Evening Market Outlook. Let's quickly break down gold, oil, and the US dollar. Starting with gold, we saw a strong gap higher at the Monday market open, pushing up towards 53.90 after the major geopolitical escalation over the weekend involving US and Israeli strikes on Iran. This isn't just another headline spike. Markets are pricing in sustained uncertainty, not just a temporary flare up. Gold continues to behave exactly like a safe haven should. Central bank buying remains strong, ETF flows are supportive, and rate cut expectations are still in the background. Momentum is clearly bullish, but we are stretched in the short term. This week's US labor market data, especially non-farm payrolls, will be critical. A softer number keeps the easing narrative alive and supports gold. A stronger number could really trigger a pullback. Onto oil, WTI spiked towards 75 at the open, but quickly retraced. That tells you that this wasn't really panic, it was repricing. Around 20% of global oil flows through the Strait of Hormuz, and with tanker disruptions and rising war risk premiums, the market is adding a risk tax to supply. The Strait isn't officially closed, but insurance costs and rerouting are tightening conditions. That said, inventories still exist and no administration wants triple-digit oil, so expect volatility but not uncontrolled chaos. Onto the dollar, January's job growth likely overstated the true strength of the labor market. Expectations for February are more moderate. If payrolls disappoint, the dollar could soften and gold extends higher. If they surprise strong, expect the US dollar to strengthen and pressure on precious metals. Overall, this isn't panic, it's strategic repricing. Stay disciplined, trade reactions, not headlines, and I'll see you in the next update.